Let's take a look at the markets here. Now, it was a very nice week for the markets. It wasn't the greatest close, but still a very good week. All four of the major indices really did well. Some more than others, but they are all at resistance points. Now, the S&P, you can see it's tagged, it's horizontal. Let's just zoom out a little bit here. We broke out of the descending. Okay, and then the last 2 days we made our way up, and here you can see I even have to move the target out the way. We're going to reach the horizontal. We almost tagged it, closed not at the highs, but still we are at or near resistance on the S&P. To be honest, there was resistance all over the place at some point, but we're close to resistance here. Let's call it 410. The Nasdaq, okay, also broke out, had a stronger close, also at its resistance, closer, technically even ventured higher than the horizontal, but it's all about the close. And to me, we closed just below resistance. Let's call resistance at 296.5. So, you can see that the similarities now between the S&P and the Nasdaq. If I just switch between them, obviously the Nasdaq went all the way down to its lows, so it's had a better recovery, and there's been a big move in tech. Look at Tesla, for example, which, by the way, I sold yesterday. I'd bought Tesla at 107, if you remember. I made a video about that. I sold it at like 178 or something, huge gain, percentage-wise, especially. So it wasn't, I didn't go in that strong, but it's all about the percentages, all right? It doesn't matter how much money you make, it's about how good you are trading. Anyway, we'll get to that later. The point is Nasdaq just below its horizontal, just like the S&P, the Dow Jones, which was the weakest indice that very recently, now also not at its horizontal, but I mean, it's ventured higher, for weeks it's been moving up higher, but it's at its descending resistance, also tagged it close below it. Even have to move this target. So yeah, tagged it close below it. Next is let's call it all-time high resistance, the horizontal. When I say all-time high, I'm talking about recently, of course. But the point is also tagging resistance, closing just below it. Russell 2000, it's at multiple resistance points. Well, dual resistance points. So the descending one, which is obviously very important, and the horizontal one. So definitely at resistance, closing just below it. So I mean, I don't know when we've had a scenario like this where all four indices are really at resistance. And for me, it's very obvious resistance. I'm definitely not the only person seeing this resistance. I haven't been looking at other channels or CNBC, but it's obvious that everyone sees these resistance points. So they will play a role. But remember, resistance is there for a reason. It's not necessarily to break out of. It could also be to, come down from. And remember, the markets have moved up so much. I mean, so much. I'm bearish. I think a lot of people are bearish. I think the silent majority are bearish. The bulls come out and get all happy, but to me, fundamentals, I'm not going to go through them again, whether it's inflation, interest rates, energy, war, technicals, just the fact that we've been in the bull market for I don't know how long, forever. We've had a nice bounce. I mean, look at this. It's not really the craziest bounce. This is the Russell 2000. Remember the Nasdaq, we're still down here. But when you look at the Dow, which has really moved up way too much, and this one has been the weaker one recently. The S&P, which is the general index, I mean, this is really the one. If you're going to look at any index, it'll be the S&P. Okay, it's not the lowest one, but it's not really moved up too much. But still, I just feel like we're going to fail. I think we've already surprised a bit too much on the upside. Some bulls have had to sorry, some bears have had to throw in the towel, and some people got squeezed, especially in certain stocks. If we look at the stocks that have rallied, it's not the big boys, it's really the more speculative ones, a bit like Bitcoin. Just feel like, yeah, we could even break out next week and then fail. The market is there to surprise you too. Even people like me who adhere to technicals, it's just gonna squeeze above. Sorry, just squeeze above, and make all the technical people just go momentum long and then come down. I mean, I don't think that is out of the question either. But the point is, all four indices closed just below resistance. Maybe the S&P was not exactly just below, but you get my point. And the point is, there's a lot of resistance just ahead for all of the markets. And I think that kind of favors the bears more than before. So the VIX what am I going to say? Destroyed. But then again, it's at support and it hasn't broken this. I mean, I'm not going to call this broken because we basically tagged the last low. So, this is a general line here, but I mean, do you really want to short the VIX here? I don't even know what it's doing down here, but anyway, that's the VIX. I don't like to cover the VIX too much because it's fully broken. Let's move on to interest rates. Zoom in a little bit here. Middle of the channel, the 1 year, I'm going to ignore it. It's just been like that for weeks. The 2 year, yeah, the 2 years sort of going sideways. It was really a sideways day, but sideways. I'm looking for that little pop. And if we really just get any sort of momentum, we could visit the horizontal line. And that's just one line away from all-time highs. And you know what I mean by all-time highs. I mean recent highs. So just watch out with interest rates. A little pop. And obviously next week we're going to get some interest rate moves. So next week's going to be very, very fun. 5 year acting like the 2 year. I just added a few more resistance lines here. So a little pop, and then we'll probably hit resistance before we get to the horizontal line. The 2 year doesn't have that, doesn't have a descending trend line resistance. So the next resistance is straight away 4.5. So the 5 year is going to have a bit of a tougher time getting to its horizontal line. 10 years should be very similar. Yeah, so the horizontal line, which I haven't drawn yet, that's the second stop. The first stop is the descending one, but that one too, a little pop and then bam, we're here, and then we'll see. This can be quick. Look what happens when we start to move. It's just, in 1 week we're there. So, and again, right after this, it's the all-time high horizontal. 30 year, yeah, I don't know whether you can say it's reclaimed that ascending line, but the point is, if we take out this descending one, we're straight at the horizontal. So, I mean, we've got some room to move here, but yeah, I just feel like interest rates could surprise the show. I said that sort of this week, didn't happen this week per se. It didn't break down either, sort of sideways up. But if we have any sort of move up next week, we could really get to horizontal lines very quickly. And what do you think the market's going to do when we're doing that? It's going to flush, and it will coincide perfectly with the resistance. And then everyone will say, oh, the technicals worked again. And yeah, they would have. The EU rates, though, that is something that I think is 1 week away from making new highs. So this EU 10-year is basically the German 10-year. Look at that, totally identical. But if you look at the French, very similar. The Italian, very similar. Okay, the British is different. But let's just go back to the EU 10-year. Look at that. A small move. I mean, we're basically 2 or 3 days away from the old highs. And if you're making new highs, I'm sorry, but the DAX is going to have to come down. And the DAX, by the way, is still just looking unbelievably strong, stronger than the Dow. But I can't see how the DAX, and I mean, it surprised me just forever here. This strength is ridiculous, just nonsensical stuff. But if the EU rates start to go up, how is this going to go higher? This will start to come down. And it will put extra pressure on the US markets, which already have their own pressure from the resistance levels that they're all at, plus their own yields will be going up. So that's what I think of yields, sort of bullish. Let's look at the dollar, which, to be honest, has still held that 101.5 range, maybe just below that ascending line that I've drawn, but still within the ascending line. I mean, I just have to move it like this. Because once you start to see the dollar move back up, you would just readjust your ascending line, because it doesn't have to be absolutely perfect. It's a general area. You don't have to be too precise. In fact, that's the problem with being too precise, is you say, oh, it's gone down by 2 cents, therefore the line is broken. No, there are people who want to trigger those shorts, and then who want to trigger those stops, and then they buy just underneath, and then the candle looks a bit weird. But if you just zoom out and just make a more general line, it's totally in play. The technicals did hold up. So here the technicals are holding up. I'm sorry, but 101.5, look at that. Look how many times we tagged it and we held, and this was basically the best close in a while. I mean, okay, you can ignore this candle here, but I think we have any sort of move up next week, which would coincide with the market going down, with yields going up. I think, just like I said for a while, we're going to move straight back to 103.5. and basically go above it and tag this. So I'm just going to move this to the right. I haven't really moved the other targets, but this is where I expect the dollar to go, short-term bullish. And so far it's really held. So obviously interest rate decisions will really move this, but dollar doing well. Let's look at gold. Well, let's look at the commodities in general. So look, you can see copper is, I did say it's a bit extended here, trying to probably come back down to $4. I think that's in play. I think commodities will come down if the market goes down, if the yields go up, the dollar goes up. So copper looks like it's trying to reverse here. Natural gas is trying to, well, I mean, I've been bullish for a while here between 4 and where we are now. I did say wait till 2.5. Don't go too crazy if you are buying. And we basically, I don't know if you want to call that 2.5, 2.7, but thereabouts, looking like a low here. I wouldn't be surprised if we start to go up here and take this descending line out, and straight away we're back at 3.5. I mean, I think this will move very quickly to the upside. So natural gas, I'm loving it down here. I did actually add to my natural gas play on this flush here. My stock, TRLEF, sorry, Trillium Energy, beautiful stock. That was up 10% today. But just generally natural gas, very nice. For me, very great buying area. I think a lot of people think it's a buy here, but oil, yeah, it broke out its descending line, just going sideways. I'm not sure why it's thinking of, I mean, if the markets go lower, then it probably would go lower. But I think a lot of people are going to be buying the dips here. For me, oil's a buy. We're going to the 90s. I don't think that changes. I think we could go way higher than 90s this year. So, don't get too greedy with how cheap it is now. Let's look at gold and silver. Finally, gold and silver starting to look a bit weaker, or at least starting to lose some of its non-stop strength. So, okay, gold was kind of unchanged, but look at the day before. I didn't get to do a video. I went out, got totally destroyed, which is rare, but I was too hungover to make a video on Thursday, and Friday I was too tired. So I didn't really get to cover those days, but basically sideways, it's starting to look pretty toppy. I'm starting to see the potential of a move back to 1900, and therefore it would look like a head and shoulders, right? Imagine what it looks like if we have 1 or 2 candles down here. It'll look like a head and shoulders. And then I'm talking about reverse head and shoulders, of course. And then down we go, we lose the neckline. And that would coincide with, some big news next week, for example. And then down we go to 1880 and maybe even below. But we'll have a few stops on the way and bounces. But I think I'm going to leave these here. We'll probably have to move it to the right by the time it starts to happen. By that, I mean here. But I'm starting to like the move down. And, just as you overshoot on the way up, you could even undershoot and go below this ascending line. I don't know, I'm getting a bit too motivated here, but, that might be a bit unrealistic. But the move to the downside looking better now. Again, with the dollar, with the yields looking like they might go up a little bit next week. I think that's definitely possible. Silver, which just kind of rocked sideways yesterday, down 1.5%. We've seen those days. I'm still looking for basically gold. I think it's going to take its cue from gold. And if gold starts to flush, then silver, down we go. I do expect a tiny bit of support down here, but especially because we have the ascending line. I don't know how. I'm not sure about this ascending line. I think it might not count because the only 2 areas that it tags is at the very beginning, and it never has any sort of tag down here. So I actually think that this line doesn't count. I think I should actually delete it, honestly, because I think once we start to move down, if we lose this area, it'll flush, and straight away that ascending line wouldn't work. So I actually think the horizontals will act more as realistic support. And I don't like I really hate to have too many technical indicators. It just makes the whole thing look noisy and wrong, and it can just mess with your calculations. So I think I'll just delete that, if that makes sense. These 2 down here and then over here never tags, doesn't count. I mean, an ascending line, for example, here would probably count. You can see that, and it started to lose it, and now we start to go sideways to the right. But yeah, no, I think that's better. So yeah, silver, I'm not going to go on about it too much. Looking for a move lower. This resistance obviously worked. We spoke about it for a long time. That's when gold was going up, 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 and silver just kept on going sideways because this was real resistance. So that one nailed that one very well. And now on the way down for gold, I think silver will come down. Let's see 22. I don't know. Let's not get too aggressive on the way down. I'll be buying on the way down, but I think we're going to move lower. Miners, yeah, they have to follow gold and silver. So you can see they've been following gold more than silver, the miners, and they've also been encouraged by the markets going up. So together with the metals and the markets, they've had a nice move up. But now, if gold starts to come down and the markets come down, I'm looking for a nice move down in the GDXs. So first, basically the horizontal lines. The only ascending line that I think counts is this one here, and I've got the same pretty much for GDXJ. The rest are just horizontal. So I think a move to the low of this area for both of them, they're really identical, to be honest, which is good. But I think the first major horizontal line would be this one here, the prior highs that we were hitting back in, let's call it December. So GDX 30, nice round number, GDXJ 37, let's call it. And if we do undershoot that, so this might be the same as gold being at 1880, 1900, I'm not sure, maybe 1880 down here. Maybe 1900, because if the market comes down, these will go down a lot. I mean, look how much they were down today, with gold basically flat, if you think about it. And these were down 2%. So actually, I feel like gold at 1900, we could have the GDXs down at the first major horizontal 5%. Doesn't really matter actually, because 5-6% is maybe asking too much. But if we undershoot that, then we've got the ascending support. And I'll be buying my first amount of miners. My first I haven't bought miners in a long time, but I'll probably be nibbling a little bit down here. If we go down here, nibbling a bit more, definitely a bit more aggressively. But I'm looking for a massive crush in all the markets that take down the miners. I'll be buying very aggressive because I've sold so much. I need to buy back at least what I sold, if not more. So anyway, let's see when we get there. But I'm looking for basically the horizontal line here. That's the first. Let's get there and then make a video. But it's looking more promising now, more than ever. Finish off with Bitcoin. It's starting to stall a little bit over here. It hasn't really gone up too much if you think about what the markets have done. So it's I wouldn't say it's independent of the markets, but it's losing its relative strength versus the markets. So if the markets come down, I think we can see Bitcoin come down here. Maybe it's asking a bit too much, 25,000. Then again, we got the weekend to go, but usually crypto doesn't move during the weekend. It used to back in the day in the non-stop bull market days, but now it kind of drifts sideways, tags the top and the bottom of the last day, but nothing crazy. Basically, probably waiting for the Nasdaq and next week to make a significant move. And I think a downside move is probably in the cards. That'll do for now. I'm going to make a video later today on my portfolio, and I look forward to doing that. Anyway, I hope you enjoyed that for now. Otherwise, have a good weekend.